It is being recorded, Eric. Yes, you'll get a copy of this probably Sunday or Monday. This is the alert service we have. We call it the Compass Text Alert Service. Compass system is where the SPY Super System started. It's been enhanced and improved since then, so now it's called SPY Super System. But we always called it the Text Alert Service Compass. And it uses the same information, the same trades that we take in the room, but it goes out on your phone and with SMS text alerts. I'm on that service, so I can make sure that the texts are going out on a timely basis. It takes me, when I track mine, it takes about 5 to 10 seconds maximum for the trade to hit my phone. Okay, now one thing I'm going to cover here, and if you've listened to my webinars before, you've probably heard me go over this, but to me this is really kind of important because it's what actually is moving the market. What can you look for to determine what's pushing the market either up or pushing it down to a degree that you can join that trend and have a reasonably high prospect of making money. And so the market's consisting of, obviously we've got lots of retail traders, these little marbles. I'm a retail trader, but most likely everybody in this room is a retail trader. The critical thing to understand is you have retail traders and then you have institutional trading, right? This is the big ball down here. The key thing is to understand is when the retail traders are mostly in the markets and by themselves. In other words, the institutions can be in there, but there's no concerted direction that the institutions, you don't have a majority of the institutions pushing the stock one way or the other. They're kind of trading against each other. When the retail traders are in there by themselves without any institutional push, you're going to have chop and chaos in the market. You don't want to be in the market when you don't have institutionals driving it. You're going to just fight against these other traders, and it's basically chop, chaos, and I'm sure you've seen a lot of it in your trading career, where stocks go up for no reason, turn around, go back down again. There's no institution in there driving. This is the institutions. This is really critical. This is what we want to identify when they're in a trade in force, and I mean multiple institutions pushing a force that stock one way or the other, right? Now this is made up of investment banks, and everybody knows about Goldman Sachs, Morgan Stanley, JP Morgan, HSBC, all of the big investment banks. Those are a big portion of institutions. And it's also critical to understand that institutions have trading desks where they actually have people that push buttons, click mice, and make trades, but that's a tiny percentage. 85% of the trades that come through here are coming from algos, program trading. Program trades are done by these institutions. They have hundreds of different programs looking for specific conditions in the market. They look for news. They look for anything that they can get an edge, even if they want to get an edge over retail traders. They'll produce MACD crossovers. If you're using MACD, they'll force MACD crossovers and then reverse them back on you. So institutions are using these algos all the time, and algos are a huge portion of the market trading. Now, institutions also include hedge funds. Hedge funds are a big portion of institutional trading, and so is pension funds, police pension funds, firemen pension funds, state worker pension funds, more billions and billions of dollars. And the last group this would be mutual funds, T. Rowe Price, Vanguard, billions of dollars that they have to invest and trade. So this is what's driving the market, and our job as a retail trader is to identify a stock that's moving and make sure that it's the institutions that's pushing it. If the institutions are pushing it, it becomes a prospect. If they're not, it's not. It's pretty simple. We just want to be in there when the institutions are in the trades, and that's what our software does to identify when those institutions are in the trade. Okay, this is going to seem a little bit off topic. This is a blackjack table. Ace and Jack of Spades. That's a blackjack. Couple $100 chips here. What's this got to do with trading? Well, when I first started trading, and I know I get this question from a lot of folks when they tell their friends or their relatives that they want to trade day trading or swing trading. Is trading stocks and options, is it gambling? Because that's what everybody will tell you. It's gambling. You can't win. It's fixed. And why this is an analogy to me is important. When I was much younger, I made my living playing blackjack in Las Vegas, counting cards. I was a card counter to play blackjacks. And just so you know, it doesn't mean I'm counting every card. I'm keeping track of what the composition of the remaining cards in the deck is by tracking when the small cards deuces to sevens are removed, and when the big cards, 10, Jack, Queen, King, Ace, are removed. As the big cards are removed from the deck, then the house has a bigger advantage. As the little cards are removed from the deck, especially 4s, 5s, and 6s, that gives the player an advantage. So I had to track what the remaining composition of the cards that were left in the deck were, right? And this gave me a mathematical edge over the casinos by knowing when the cards were in my favor. In other words, when the player had an advantage over the house. And trading stocks and options is very similar to this. Without knowing when the institutions are in the trade or when they're not, the trader really doesn't have any edge. You're in essence, they're gambling. If you're trading without knowing if the institutions are in there, you're just gambling. So in essence, it is gambling unless you have an edge that gives you a mathematical edge over the other retail traders. SPY super system, which is, I call this is my card cutting system. This tells me whether the institutions are in a trade and whether they're not. And that gives me an edge over the other traders, allowing us the ability to become consistently profitable traders, right? And the SPY super system, in conjunction with identifying the best high probability trades, can lead to consistent profits. You can find 4 or 5 trades at a time that the institutions are in. Then you want to be able to find the very best of those to trade. That's how we find the highest probability trade setups, right? But that's why this is in here, because we have a method that eliminates the fact that we are now not gambling. Just like when I played blackjack, I had a card tracking system that gave me an advantage over the house. Okay, now we have a couple of rules to trade by in the room and on the alert service. First one is we trade the best and skip the rest. And this sounds real easy, but this is important. Trading the best, obviously, we're looking for trades that the institutions are in, and then the very best trade of that group. Skip the rest. This is even more important. Bypassing trades that look good. Setups may look good technically. You may have heard good news about the company, etc. If the institutions aren't in there, we're not going to trade them. So this is where skipping the rest. And if you can skip trades that might look good, but don't going to give you the edge that the best trades do, this is just like money in your pocket. Skipping a bad trade is just as good as taking a good trade. And a lot of traders don't seem to understand that. And this comes down to our next point. Our objective is not to make trades. Our objective is to make money. In other words, don't just trade to be a trader. This is a big problem with a lot of retail traders. They feel as though they have to have a trade on all the time. They don't want to sit there and watch. They get antsy. They get impatient, and they start justifying taking trades that they shouldn't be trading. All right. So again, our objective is not to make trades. Our objective is to make money. Let's keep that in mind. We want to maintain discipline. Now, when I say maintain discipline, what I mean is you need to learn the process that's going to give you an advantage. Right? We're going to go over that in quite a bit of detail. But once you find that process and you know it works, and again, we have an 85 to 90% win rate. Once you've got that process, you've got to have the discipline to stick with it. Don't start running around reading social media or listening to Bloomberg or listening to CNBC and listening to these talking heads on there and start making trades based on some of that stuff. Learn the process and then follow it. Okay, and then remain patient. And this is the big thing for retail traders. Don't be chasing trades when they take off early in the morning. That's FOMO, fear of missing out. Avoid that. Wait for the stock to come back, touch the support and bounce, and then move into it. This is what I'm talking about, remaining patient. You have to remain patient till you can find a good stock, and then you got to remain patient until that stock comes to a support level or a resistance level that you can trade off of. That's really important. All right, and again, profitable traders, as a profitable trader, we obviously need an edge. Our edge is we have a massive edge here. We have the SPY Super System software. We look at that, we can tell whether the institutions are in the trade or not. We trade relative strength and relative weakness. Now, this is not RSI. If you know about indicators, you heard the RSI indicator, relative strength index. This is not that. This is, we just trade relative strength and relative weakness. How is my stock trading versus what the SPY is doing, or what the Qs are doing? Is it, if the SPY is moving sideways or moving down and my stock is stacking green candles, I've got relative strength, and vice versa for relative weakness. This increases your edge dramatically. Because if you're in a trade that looks good and it's moving up, and then all of a sudden the market reverses and it heads back down and you had relative strength, it's not going to head back down as fast. It may keep going up. So that's important. Relative strength and relative weakness is one of the main criteria that we use after we know if the institutions are in there. Then we want to trade with the market trend if there is a market trend. A lot of times there isn't, but if there is a trend. And then buy near support, sell near resistance. This is where patience takes effect. Once you find a stock that you like and you want to trade it, wait for it to come back down. If it's long, wait for it to come back into support before you go long and bounce off support and confirm that it's going back up, or sell near resistance if it's going to be a short. It comes up to resistance, bounces off resistance, heads back down. And this is where Heikin-Ashi becomes important, because a Heikin-Ashi candle, once it's created off of support or resistance, is giving you confirmation that the reversal is real, right? It's confirming the reversal. Okay, the compass system, which is now the SPY super system, I run it on Thinkorswim. It runs on Ninja, it runs on Thinkorswim. I use it on Thinkorswim. Important distinction here. I don't trade on Thinkorswim. Just because you're running the software on Thinkorswim or on Ninja, you don't have to trade on that platform. I don't. I trade off of a program called Trader Pro, all right? Because I don't pay any commissions. Pay very, very tiny ECN fees, but no commissions. But the point of the SPY super system identifies the highest probability trade setups while sidestepping setups that look good, but they fail more often they succeed. It does this by identifying when the institutions are driving the move and when they're not. You'll hear this over and over again, very critical. The compass system, or the SPY super system as it's called now, analyzes complex trading data and displays the results in easily identifiable visual format. This makes it easy for even somebody who's not a seasoned trader, a fairly new trader, to identify easily whether institutions are in the trade or not. So again, this visual element makes it possible for even new traders to find high probability trades. And I believe from a trading standpoint, if you're trying to learn to become a trader, this is going to speed up your learning curve dramatically to get to become a profitable trader. Okay, how does this give us an edge over other retail traders? We're only taking trades that are being driven by the institutions. I keep repeating this. This is important to understand. Trade stocks that have relative strength or relative weakness versus the SPYs or the Qs. Trade in the direction of the overall market. If you do these three things here, then you're going to be ahead of about 97% of retail traders out there, and there's tens of millions of them. How does this give us an edge? Well, our trades are going to be supported by institutional buying and selling. Stocks will be outperforming the index, either up or down, and they'll be moving in the direction of the overall market. All right, that's our edge. This is the edge we're trying to get. Now, it's important to understand, I'm going to show you today the SPY super system software, the actual piece of software that runs on Thinkorswim. I'll show you the indicators and how we use them. But it's important to understand the SPY super system software. It's the critical element in finding and trading the highest probability trades. We've got to be trading the high probability trade setups to become consistently profitable. The SPY super system is software. It's the engine that drives these exceptional results. You're going to see the results that we have. Again, 85 to 90% win rate most months. When you see those results, remember they're being driven by the SPY super system software. That's what we're coming up with these trades. And the ability to identify when institutional players are driving a bullish or bearish move and when they're absent is a key factor in pinpointing high probability trade setups. Absolutely. And again, this is the function, that's the function of the SPY super system software, and it's the critical component in the results that you're going to see here. Okay, I do, as I mentioned earlier, I do a YouTube feed every day from 11 a.m. Eastern time, 11:15 for an hour. It's on Rightline YouTube channel. I'm out there every day. You can see me. It's basically you come into the room when you're on the YouTube, and you'll hear everything I'm saying, all the questions answered, all the stocks that we're looking at, all the charts will be shown, and you can ask questions. It goes for about an hour. Now this, I was going to put a little slide in ahead here. I did a video on the 11 most common mistakes that retail traders make, but there is one in particular that I find to be really irritating to me, because I get traders telling me this all the time. They'll take a trade, and I'll ask them, why are you taking this trade? And they'll say, I saw it on social media. Wall Street bots, bets, or whatever. I heard about it on Bloomberg. I read about it in the Wall Street Journal. Why this frustrates me so much is when you make a trade-off of something that you heard, saw, or think, all right, then you're taking a trade based on your own opinion. And this is a quote from Stephen Hawking. The greatest enemy of knowledge is not ignorance. Not knowing about a stock is a lot better than having the illusion of knowledge. And when you take a trade based on something you read on social media, or you heard about on TV, or somebody told you about, when your best friend's father knows about this stock, all of a sudden he's going to tell you, this is trading under the illusion of knowledge. And it's the greatest enemy of knowledge. It's not ignorance, it's the illusion of knowledge. And it's a killer. And it's one of the 11 most common mistakes retail traders take. I hear it all the time. Anytime I ask somebody to tell me why, they'll show me a chart. They say, what do you think of this trade? I'll ask them, why are you taking it? I read about it, I heard about it, or I think. If you have any of those in your explanation of why you're taking a trade, you're trading with the illusion of knowledge. Okay, just wanted to put that in there because it's a real bugaboo of mine. Okay, so this is a graphic of the SPY super system on Thinkorswim. And all I did, I don't even put it up here because I'm going to go into a little detail, but I just kind of wanted to show you the indicators that's towing us whether the institutions are in the trade or not. We have the bottom here. This is the momentum oscillator that we're using now. We're using a Laguerre, but the Laguerre has the divergence stripped out of it. This is just pure straight momentum. This is what we're measuring. And momentum has a very specific structure. It doesn't mean because the price is moving up or the candles are green that it's got momentum. Momentum is if you have a 5-minute candle or a daily candle, if each candle that appears, if the close of that candle is getting closer to the high of that candle, as it moves up, the close of the candle is closer to the high of that candle. If it keeps going up like that, that's momentum. That's how you measure momentum. On the chart, you're going to have 2 momentum indicators: a current time frame momentum right here, and a multi-time frame momentum. They can be either red or yellow for short, blue and green for long. Right? Institutions are selling, institutions are buying. Right? Right here, this current time frame momentum switched from selling to buying right here. The institutions on this time frame, which happens to be 5 minutes, the institutions were selling, they're switching over to buying right here. Multi-time frame is on the 5 minutes, the 5, the 15, and the 45. This hasn't switched over, so all 3 of those time frames are not in conjunction right now. This is a long-term trend that I use not as much. These are the 2 most important ones to me. Up here, we have a couple of really important indicators on the 5-minute chart. Because this, for intraday trades, if you're trading quick trades like scalping trades, 5-minute candles, you're only going to be in the trade for 10 minutes, 20 minutes, a half an hour. This is a key level right here. This is the VWAP. This is called the volume weighted average price. Volume weighted average price is something every single institution has on their charts, and they trade off of it. Their algos use this all the time, right, to get in and out of trades. Volume weighted average price, key support and resistance level. Enter a trade when it's breaking above the VWAP. Enter a trade for short when it's breaking below the VWAP. This little thin line here, the red line, that's the 15 EMA of an EMA. This is the secondary support resistance level we use on a 5-minute chart. This will use, if this price gets too far away from the VWAP like it is here, this becomes our support and resistance level, okay? So if you were entering a trade here on off the 15 as it's breaking, you see how the price is breaking below 15? If you're entering it there, your 15 would then become your stop, right? So, and one other line, this is the pivot point. We have one pivot point that the SPY super system calculates. This is really important. The pivot point, I don't trade off of it, but I use it for getting in and out of trades as the price approaches that level, because it's a very strong support and resistance level as you see it bounce right off of it here. So if you're in this trade here, this is where you wouldn't get out of it. Right, so those are the key things. We also have these arrows, blue arrows and pink arrows. These are called pop signals, or pop out of the box. These indicate that this price not only is moving down, but it's breaking out of compression to the downside, breaking out of compression to the upside. So they're very useful in finding entries into a trade. All right, so that's the SPY super system on Thinkorswim. Again, you don't have to trade on Thinkorswim, but this is what you'll be seeing a lot of it here. This is also that's the same platform. We've added one more indicator on the 5-minute chart. It's called trend. It's a VOLD. This shows you what the market internals are. This is telling us if the total, if you take the total amount of volume that's trading on this 5 minutes on a whole New York Stock Exchange, they take all the positive volume of stocks moving up and subtract the negative volume of the stocks moving down, and that's going to tell you what the current trend is based on the market internals, which is the total amount of volume being traded right at that point. Right. So again, it tells you that it's going to be red or yellow for trending down. This tells you it's going down, but it hasn't got red yet, but it is moving down. And it can also be blue and green, and it'll say trend up. And that tells you what the market internals are doing. And it helps a lot when you're try to take an intraday trade. If you want to go long, it's a big help if this is already blue or green and trending up, because you're basically joining the majority of the volume in the market at that point. Okay, so that's on the 5-minute charts. That's a new indicator we just added. It's called the current market momentum. I'll just show you a couple of trades here so you can kind of see in real time what these things look like. We're going to look at a lot more of these. This is a daily chart. This is a daily chart on NVIDIA. And this is a trade we took back in August. And you'll see that it's the current time frame, multi-time frame on the daily chart. We want these to be aligned, either blue or green, or red or yellow, blue or green for long. You notice that the institutions have been buying this thing for quite a while. It switched over here in 728 to buying, and they've been buying all along. What we look for here is we look for a good entry. All right, so an entry here would be, you see how it moved up, and see how this pulled back right here to this 15 EMA and bounced off of that? That's called a PB, what we call it in the room, it's a PBO, or pullback opportunity. This becomes a pullback opportunity on a bullish stock that hits support and bounces off of it. We took it right here as it moved up off of this support level, and we get out right here and we took 3 days, 32% profit in NVIDIA on this trade right here. Now, by the way, this pink line, the VWAP, this is on here, but this does not, you don't use this on a daily chart, only on a 5-minute chart. All right, so that was one we took. This is SMR. This was another nice long we had. And again, I want you to see how simple it is to use these indicators, right? Because here's the current time frame momentum on the daily chart, multi-time frame. We want this to be aligned. You see how they're not aligned here? You get yellow, and here you get green. But notice it switches over to green here. Now they're aligned. This is where we took the trade, right there. This was off of earnings. We took the trade right here. We zipped into it on that day, got into 513, out on 515 at 56% profit. So 2,000 invested in that trade would have produced $1,170 profit. Everybody in the room and on the alert service had this trade. Well, I assume they did. We posted it and sent it out in alerts. And this is what we got. But you can see that. You see how it's very obvious that the institutions went from selling to buying. Okay, this was Tesla. This is a 5-minute chart. Right? When do we take Tesla? This is early in the day, right here. You notice it's blue here, so the institutions are buying. We wait for it to get above the VWAP. You can take an early morning trade here. I don't take very many of them, but this was a good one because it broke above the VWAP. Institutions were buying, and this is a 5-minute chart. So we're only interested in the current time frame momentum right here. All right, this told us that we could get into the trade here, which we did, and we rode this thing up, and then it hit this level right here, and as soon as it starts to turn red, with a red candle, I'm out, and heads down. And you notice the next candle, it switched over to the selling. So this was the sweet spot of the trade right in here, where it was green the whole way. All right, and this was an intraday trade on the SPY. We do quite a few of these intraday trades on the SPY, but if you were looking at this, you notice how it's long here, but it's below the VWAP. You can't take it. Then it goes short. Now you could have theoretically taken a short here. I didn't that day, but it would have worked a little bit quickly for you. But this is where I was really interested. A break above the VWAP as it went from selling to buying, right there. And that's where you take the trade. And this is where we took it, and we wrote it up. We're getting popped by the box symbols. It was pulling away from the VWAP. So the 15 became a stop. And as soon as the momentum starts to head back down, I get out. Now you probably could have stayed in it because it stayed green. And you would have got a little bit more money out of it. But once it turns yellow, you're done with the trade. But I was done with the trade right there because that was a pretty nice move up. All right. And this was an overnight trade on Wendy's, just to see, again, to see the indicators, because we're going to look at a lot of these, but I want you to see the indicators. Here's Wendy's, and here's the earnings. You see how it's blue here, buying, and then it went to selling right here. This is where we took the trade, as it broke below the 15 on the daily chart. Take it right there. We just in it for one day. Just took the Wendy's trade right there. It was a nice trade, made us some nice money. But again, we're just following the institutions. That's what we're doing. Okay, just something to throw a little humor into the presentation. This is somebody trading with emotion. It's important not to be trading with emotion. You want to trade with as little emotion as possible. Obviously, there's going to be some motion because you got money involved in the trade. But this is somebody who's perhaps jumped into a FOMO trade early on when it was ripping up, and it turned around and headed back down on them. Didn't know what to do, or get into a trade the institutions weren't in, and he got a big red candle and flushed him out. This is what you look like. And this is what somebody looks like who's actually got a methodology and is following the institutions and is trading successfully. I don't really cheer like that, but in any case. All right, so this is kind of important. The process precedes results. What I'm trying to get across here is it's important to understand, to learn the methodology and how to use the indicators before you start worrying about your profits, right? A lot of people watch their P&Ls all the time. I recommend you don't watch your P&Ls because it's going to impact how you trade. You're going to trade based on your wins and losses. That's not what you want to do. You want to be a technical trader. You're trading off of the technicals of the stock on the chart and the institutions being in it. So learning the high probability criteria and strategies must come before focusing on the results. Focusing on the results, P&L, without having a solid process to follow is going to end in failure. I don't even look at my P&L during the day. I recommend you don't either. I have a good idea what my trades are because I know where I get in and what the stock's doing, but I'm not looking at my P&L. I look at it at the end of the day, but not look at it before. And this is a big problem for a lot of people because if you're in a trade and you're up $300 on the trade and it pulls back down, all of a sudden you're down $50 on it, and then it bounces back up again, and now you've gone up 100, and then it drops down, and now you're only up 50. A lot of human nature is bail. I was underwater. Now I'm green. I'm getting out. I'm taking my money to go. But the trade is still a good setup. As long as it's technically a good setup, you probably should be thinking about adding to the trade, not getting out of the trade. And that's what happens when you follow your P&L. Okay, now this is something I just threw in here, and this is something you can look at when the video comes out, when you get the copy of it. It's called the OODA loop. It's basically a mental process that I go through for my trading. It's also used in the military, and it's used in a lot of corporations. It's called the OODA loop. Observe, and observe for us is use our scans, watch lists, and news to identify prospects. Orient, identify whether the prospect meets the high probability trade criteria. In other words, support resistance levels, what's the option chain look like? And once you've oriented, then you decide, does that stock, is that a high probability trade setup that you're ready to trade? Right, you decide if it is. If it is, you act, make the trade, try to avoid analysis paralysis. It's basically meant to get you into a trade as quickly as possible based on the criteria if they meet the criteria that you have set. Okay, that's OODA loop. This is the high probability trade setup funnel. So this is the process that it's obviously this is a virtual process. This is a mental process I go through when I look at a trade. The first thing I do, if it's going to be a swing trade, especially, is look at the daily chart. If I'm going to go long, the daily chart must be bullish. If I'm going to go short, the daily chart must be bearish. And then if I'm going to go long, then I get in the trade based on the 5-minute chart turning bullish, right? Like a bounce off the VWAP or something. But this is important. You also want to trade with the trend of both the stock and market. If the market's trending up for the day, you want to find a stock that's trending up for the day and trade that stock. You don't really want to trade against the trend if you've got a trending market. Now, a lot of times you don't. A lot of times you'll have a choppy market. But if you get a trending market, okay, you want to be trading with that trend. Then here's this is the deal breaker right here. The SPY super system must align. If you're going long, okay, and it's going to be a swing trade, then the daily chart, the daily current time frame momentum and multi-time frame momentum have to be blue or green for long. If you're going short, they've got to be red or yellow. Both of those have to be true if it's a swing trade. If it's a 5-minute trade, if you're trading off just the 5-minute chart, you're just taking a quick intraday trade for maybe 10, 15, 20 minutes, a half an hour, that's all you're looking for, then the SPY Super System indicator, the current time frame momentum must be green or blue for long, red or yellow for short. Don't trade against it, because you're trading against the institutions when you do that, and that's a recipe for disaster. Okay, and then we trade relative strength and relative weakness, which we've talked about. Enter near support and sell near resistance. Those are the ones we covered earlier on. That's the trade setup funnel. This is just the funnel written down. You can just, SPY Super System indicators must align in the direction of the trade. The stock to be traded should have a daily and 5-minute chart aligned. Very key, very key. And again, on the 5-minute chart, if you're going to go long, the price should be above the VWAP. If you're going to go short, it should be below the VWAP. Okay, now inside the room, these are the strategies that we use on the room and the alert service. Straight calls and puts, big majority of those. We just had a beautiful one in GLW this week. Corning, really nice. We had calls on that, really, really nice. We had fresh pet. We closed this week as well. Those were puts. It was a short. It was set up a beautiful short. We took profits in that. I also do straddles and strangles. If you're not familiar with these are option strategies that are non-directional. You don't care if the stock goes up or goes down. You just want it to move a lot one way or the other. So we do a lot of that, right? Straddles and strangles. We use debit spreads using weekly options expiration. This is important. Debit spreads produce much better return when you're using this current week's expiration as your expiration date. I do time spreads over earnings. This is a non-directional trade that captures the volatility crush. If you don't know what volatility crush is, before a stock has earnings, before it comes out, the market makers increase the price on the puts and the calls. They make it more expensive to buy those, right? Because they don't know which way the stock's going to go, and they don't know how far it's going to go. So they increase that. But we do a calendar spread by selling this week's calls and buying next week's calls. When the earnings comes out, the option prices then drop a lot. The implied volatility that they put into those trades, because they didn't know where the stock was going to move, now come out of that trade because now they know where it went and they know how far it went. That's called volatility crush, and that's what we capture on these time spreads. We had a couple of really good ones the last couple of weeks. The weekly ATM strategy, we have one of these on right now in Alcoa. This is where we sell weekly puts. We take a stock that we like, neutral to bullish. We sell puts on it every week. And we also have a longer term dated put. In this particular case, we just sold, for next week, we just sold the September 12th, 32 puts, but we have the October 17th, 30 puts. So we're buying a put that's lower down than one we're selling, and that gives us protection to the downside. So if the stock breaks down, we can still make money on the long put, and it also reduces the amount of margin that we would have needed on that stock if we were just selling straight puts. That's the weekly ATM strategy. We don't do an awful lot of that. Mostly, the market has to be cooperative. We haven't had any in a few months, but we're getting some now. I do credit spreads to capture premium over a few weeks, and SPY Super System trades. I'm going to separate this a little bit. This is the SPY Super System. This is where we actually take very quick trades on the SPYs, the Qs, the IWM, or if you like, on futures. And these are using 5-minute candlesticks. They're very quick, and I can't post these in the room. I train on the setup. I have a video on the setup. If I identify them, I'll show you that the setup's there, and I'll tell you if I take one. But I can't post them. So any results I get from the SPY Super System obviously are based on my results. But these are very high probability trades, and these are for folks who want to trade more than just 1 or 2 trades a day, but only want to be taking very high probability trade setups. All right, a couple of questions. You do not use the 1, 2, or 3 minute charts? I do not, Neil. I use the 5-minute chart. I use 5-minute. I don't get down to 1 or 2 minutes and 3 minutes. Too much noise. Too much noise. I find that if you're a hyper scalper, that's fine. You can use tick charts. You can use 1, 2, 3 minutes if you're hyper scalping. But for me, 5 minutes is what I want to use. If I switch over to a lower time frame, there's going to be too much noise. I'm going to get shaken out of trades that I shouldn't have. Eric, what's the stock you currently have weekly ATM on? On Alcoa, AA, Eric, OA, AA. We started it last week. We just rolled it over from last week to this week. We took some profits on the $32 puts that we had last week, even though it closed below 32, rolled them over and then collected premium on next week's 32. So we just keep rolling it over at 32 every week as long as it stays between about 30 and 32. Just collecting premium. Okay, all right, so those are the strategies you use. And just to go over the alert service quickly, it's designed for day trades and short-term swing trades. It's not an investment newsletter. Basically, it's just for day trades, which would be, typically you're going to get day trades on the alert service that I'm planning on being in at least for a few hours. I'm not going to send an alert out on something that I think planning on being in for half an hour. But for anything that's like, most of the day or overnight or up to about 3 weeks, that would be those would be the alerted trades. Again, it's designed for traders who can't watch the market all day. These real-time alerts will be in the highest probability trade setups. What's the highest probability trade setups again? Institutional involvement, and then we line up market internals, and then I look at technical analysis to find the best. All right, so it's really important. Now, it's one thing to understand on the alert service. If you're a trader who doesn't have $25,000 in their account, or you don't have a cash account, you're under what's called PDT, or pattern day trader rules, not for futures, but for any stocks and options, right? So you can only make 3 intraday trades in a 5-day period. All the trades that I take and I alert on are all based on the daily chart being in the same direction that I'm taking it. So even if I close it out in a day and you can't, if you hold it overnight, you've got an extremely good chance of still making more money on it because it was set up on the daily chart to be bullish on the daily chart. So holding overnight is typically set up that all the trades I take, except for the SPY Super System trades, are structured so they can be held overnight. Okay. Was the AA ATM trade posted on the alert service? Yes, it was, Eric. It was. In fact, I put the roll in there yesterday. It was. We did it. I forget. I'll show you the notepad on it because this is what we posted in the room, and this is what I sent out. Just give me a second here to find it. All right, so here's the weekly ATM. All right, so the weekly ATM on AA, we started on the 29th. What we did is we sold the September 5th 32 puts and bought the October 17th 30 puts. We paid $50 for it, roughly $50, 51 cents, $50 a contract. We bought it back yesterday. We bought back the September 30, whoops, that should say the September 30 puts, not the 32s. That was a mistake. But if you had it on, you would have known it was the 30 puts. I'm sorry, that's right, that's the 32 puts. We bought back the 30 puts for this current week, and we sold the September 12th 32 puts. So now we're short next week's 32, and for that roll, we collected $60 a contract. Okay, so that was the alert that went out on it. It says RA on there in the room where they're posted. It'll say RA if it's in the room and it went out on alert service. All right, there's like one here we closed. HP was a line we closed that was just in the room. This was Newmont, we made money on this. This was in the room and the alert service. So that's how you see these, and the alerts will obviously come to your phone. All right. Do the users of the SPY Super System do more trades in their own besides than the alert service? Yes. If you're in the room or you have the SPY Super System, a lot of trades I take I can't alert on. If I can't alert on the SPY Super System trades, obviously, the really quick trades on the SPY, the Qs, the IWM, because they're too quick. Obviously, a lot of traders take those. But also I'll take some trades that I only think I'm going to be in for a very short period of time. Not a SPY Super System trade necessarily, but I'm looking for maybe 25 or 30% gain in the next hour or so. I probably won't alert on those because they're likely to be too quick. And I also don't alert on anything that takes place after about 4:30, 3:40 in the afternoon, because I want to give the alert members time enough to get it in the trade. And if it goes out late like that, they might not do. And so, and there's other trades we talk about in the room that we can't alert on because they're too fast, but we take them. So anybody who's using the SPY Super System, themselves are gonna do a lot more trades. Yes, they will. Okay, this is my equity curve. This is my equity curve for this year. This is on the options room. This is based on putting $2,000 into every trade. I have to use some sort of a baseline on this, so I use $2,000 per trade. Obviously, I don't take 2,000 every trade. I vary. Sometimes a lot more than that, but I vary. But based on the market conditions, if I got a trending day, I'm going to take a larger risk, more contracts. A choppy day, I'm going to take fewer contracts. But if you did 2,000 on each trade we've had this year, this is what the results have been. July was exceptionally good. I mean, exceptionally good. All right, now we're going to talk about trading Heikin-Ashi candles, and I'm going to show you, go over a little discussion. Then I'm going to show some live charts from Friday, and we're going to look at Heikin-Ashi candles on both the SPY Super System, on Thinkorswim, and I'm going to show you my TC2000 charts, which is where I do my charting. Okay, so Heikin-Ashi candles using the SPY Super System. Now, to understand Heikin-Ashi candles, they look just like regular candles. I mean, these are Japanese candlesticks, but these are Heikin-Ashi candles. Now, this is on the British pound, the Japanese yen. That doesn't matter. What matters is the candlesticks. This could be anything. This could be Tesla. This could be gold. This could be McDonald's. It could be anything. But what you've got is candlesticks that have flat tops like this. See the flat tops? These are bearish Heikin-Ashi candlesticks. It takes two candlesticks to make one Heikin-Ashi candlestick. This is a bearish Heikin-Ashi candle. Flat top, flat top, flat top. This is a bearish trend of Heikin-Ashi candles, right? So these are bearish. Now notice that this candlestick starts in the middle of the previous candlestick all the time, right? Always starts in the middle of the previous candlestick, always, right? But what we're looking for, the key thing that I use Heikin-Ashi for is I'm looking for what's called a Heikin-Ashi reversal. I'm looking, for example, let's say I was looking to take this particular stock. I was looking to take it this FX. I was looking to take this long. It's coming down, but I'm looking to trade it long because I know it's bullish today. It's coming down near support. Where do I get into the trade? Right. So this is your Heikin-Ashi reversals to the Heikin-Ashi candles to the downside. A lot of flat tops. Now you start getting some green wicks and tails here, right? This is a flat bottom. This is a Heikin-Ashi reversal bullish right there, right? See the flat bottom? Flat bottom candles are Heikin-Ashi candles that are bullish. But I have a caveat here, and that is when you have a trend like this, it's so strong and so big, you don't really want to take this trade on the first Heikin-Ashi candle unless it's really big. In other words, if this candle isn't as big as some of these, you don't want to take it. Now, you would have made money on this. You would have got in here with a Heikin-Ashi reversal right here. You could have taken it to here, to here, to here, to here, to here. You would have had to get out right here. But we only had two flat bottom candles, and then we're getting wicks and tails. So then it reverses back down again. We get a Heikin-Ashi reversal to the bearish side. This is the candle where I want to take the reversal to the upside. This is a Heikin-Ashi reversal bullish right here. See the size of the candle? See how the flat bottom, and then see what it does when after that happens? See the flat bottom, flat bottom, flat bottom, flat bottom, couple of wicks and tails, but still green, flat bottom, flat bottom, flat bottom. This is a Heikin-Ashi trend. This is a Heikin-Ashi bullish trend that you're riding. And if you're using Heikin-Ashi candles, you can see that this trend is intact. If you were using regular candles, there may be a lot more noise in here than what you're seeing, right? So this is a nice Heikin-Ashi reversal, and this is where you would have get out right here, right? So that is what the Heikin-Ashi reversal looks like. That's what you're looking for, being either bullish or bearish. These are what the candles look like. So distinctions, the Heikin-Ashi candles, this is important. The Heikin-Ashi bullish candles have flat bottoms, bearish candles have flat tops, right? Don't worry about the wicks and tails. Wicks and tails on regular candles, if you have a bullish candle, green candle with a big wick on the top, a lot of times that interpreted as being bearish because there was a lot of buying coming in and then they sold it off back down again. That's not true with bullish Heikin-Ashi candles. Wicks on the top are even more bullish, right? Bearish Heikin-Ashi candles have flat tops, and the reversals are identified by flat top candles followed by flat bottomed, and flat bottom followed by flat tops. That's what we're talking about right here. That's the main distinction for Heikin-Achi candles and how to use them. Okay, this is just an introduction to that. Just wanted to put a little information. You can read through this if you want. But the reason that they start on the halfway up of the previous candle is they combined open close data from the previous period with open, high, low, close data from the current period. That's why you get them starting in the middle. All right. And Heikin-Achi means average pace in Japanese. Okay. Now again, this is just what we saw here. We just kind of, so when you get the video, you can, if you want to look at this, you can see the description of why this was taken. But you see the bearish move here, and then moved up. Remember we saw this, and then it moved back down. Now let's say this blue line was your VWAP, for example, on a 5-minute chart. You want to get in when it breaks above the VWAP with a Heikin-Achi reversal candle. Here it is right there. Heikin-Achi reversal candle right there with a flat bottom after being short, and it goes through the VWAP. This is where you would get into the trade. As long as it stays above the blue line, you'd stay in. Look at the trend you run into. And then, of course, you're getting out right here. Here's a Heikin-Achi reversal to the bearish side. Not that you would trade this short, because these candles are much too big to take this as a short trade right there. But it would get you out of the trade. All right. And again, these are just tips. These tips are for any particular trade. Always know where your support and resistance level are on your daily chart, especially when you're in a trade. Make sure you've got enough room to your resistance or support level when you take a trade to get enough profit to justify the trade. Okay, align with the current trend, look for relative strength, relative weakness, etc. Right, same things we talked about. So again, we just talked about these distinctions. Now, this is the advantage of Heikin-Achi candles. It smooths out the price action, reducing noise. This is really critical. Noise on a chart, if you're in a trade and you're watching 5-minute candlesticks, and let's say you're long and then all of a sudden you get a red candle, it causes you to freak out a little bit a lot of times. With the Heikin-Achi candles, you're not going to see that noise. So it's going to allow you to stay in those trends a little bit longer. The bottom of those Heikin-Achi slides is cut off. Here, you're talking about, Eric? I'm going to go to some live charts in a minute anyway. Okay, yeah. The ones that I wanted you to really be aware of was this one right here. Those are your Heikin-Achi candles. Okay. So again, we know about that. This is the main distinctions. What the advantages of Heikin-Achi candles are. Smooths out price action, reducing noise, makes identifying trends much easier, improves identifying confirmation of trends or trend reversals. This is a big one. This is a big one because a lot of the trades that you're going to want to take, you're waiting for stock to come back down and bounce off support and head up back into the trend again. If you use Heikin-Achi candles on these reversals, because Heikin-Achi candles are made up of 2 candles, you have the confirmation of that trend reversal built into the Heikin-Achi candle. You don't have that with a regular candle. And again, it helps identify potential exits when the candle's body shrink or reversal occurs. All right, I'm going to show you this is just to show regular candles and Heikin-Achi candles on a chart. Then we're going to go to some live charts. What other indicators can I use to refine the trade? Assad, I'll tell you in just a bit. I'm gonna get into some technicals on those when we look at these in just a second. All right, so this is Uber. This is Uber. I want you to look at the May 1st date right here. All right, you see this big gap up and another gap up and then move. All right, so these are regular candlesticks. This is what the chart would look like on regular candlesticks. All right, and you may be afraid to get into something that's going like that. Here it is. Here's the Heikin-Achi candles on May 1st. All right, so where would you enter this trade? All right, so here's your flat top candles here. Those are Heikin-Achi bearish candles. All right, here's the Heikin-Achi reversal right here. This is where you would take the trade right there on May 1st. This is where you would take this trade long if you use an Heikin-Achi reversal candle right there. This is TC 2000, so you can see it here, but it's much clearer on this one. And you can see the flat bottom. You can see the reversal. All right, May 1st. This is where you would have got in right here, May 1st. This is where you would have taken the trade on this gap up right here. This gave you the Heikin-Achi reversal candle. You would have caught this gap and all of this moves. And then, of course, where would you get out if you were in the trade? Heikin-Achi, look at flat bottoms. This is where you start to think about getting out. You get out right up here. As the momentum starts to slow, then you go to wick and a tail, you're out. You've grabbed a huge profit in that. Okay. Eric, good question. With Heikin-Ashi candles, do you wait for the candle to close before acting? All right, this is a really good question because on Heikin-Ashi candles, once if you're on a 5-minute candle, for example, once about 2 minutes have gone by of that 5-minute candle, the chances of that Heikin-Ashi candle reversing and not having a flat bottom, for example, are very, very slim. So you can take a trade as the Heikin-Ashi candle is forming if you give it enough time. If it's forming on a daily, you would probably want to wait till afternoon time, around 2 o'clock or so on the daily, to assume that that Heikin-Ashi candle is going to remain. But on a 5-minute candlestick, once you're about 2 minutes into it, it's very unlikely to have it, not to have a flat bottom when the candle closes. Okay. All right. So there's Uber. Now we're going to look at some live charts here, and I got to just run a quick scan on my TC2000. Do it right here. All right. And I'm just going to kind of randomly pick some stocks here that have Heikin-Ashi reversal candles, because I do have a scanner in TC2000 that identifies them. Okay. All right, so let me bring up the live charts here. This is the SPY super system right here. This is what you'd actually see if you're in the room. All right, this is a daily chart of Shopify. This is when we just traded this week, as a matter of fact. Shopify, we took it right here and get out. We took it here, get out right here. See how it went from yellow to blue right here? We just took it on a 5-minute candlesticks, which I'll show you right here. We go back to Shopify. We took the trade right there and took out and get out of it. There's a broke above the VWAP. Took a pretty good profit in that one. All right, but I'm going to, for the time being, I'm going to switch over to daily charts. I want to cover a couple of daily charts. All right, so let's look on. And I'm going to switch this from a style from candlestick to Heikin-Ashi candlestick. That's all you have to do. Switch it to Heikin-Ashi. These are all going to be Heikin-Ashi candles now. All right, so this shop, by the way, you can see shop put a Heikin-Ashi candle in the day we took it. It continued yesterday. See the nice Heikin-Ashi candle. I wouldn't really be swinging it right now because this is yellow. I'd be waiting for that to turn to blue. But let's take a look at some trades here. All right, so I'm going to look at Neogen. And all we're looking for right now is just to see if they have Heikin-Ashi candles on the daily chart, right? Right. See the Heikin-Ashi candle right there? Let me blow this up. See the wicks and tails? See the flat bottom? This is a Heikin-Ashi reversal to the upside of Neogen right there, right? So that's what you find. Let's try HTHT, and I'm just randomly picking some of these that I see on the list. I don't know whether they're good or whether they're not, but this is actually, yeah, there's a Heikin-Ashi reversal on HT right there. See the flat bottom? That's Heikin-Ashi. Now I wouldn't take it because it's yellow, but it's still a Heikin-Ashi. That's, again, you've got to go beyond just one indicator. All right. Here's STLD. There's STLD. Nice one right there, but again, yellow, can't take it. A lot of these stocks bounced yesterday are coming off of deep lows, so I wouldn't take them. Is EMBC. But again, you have to use all your indicators. Now this is a good one. This is EMBC right here, Vector Corporation. Beautiful Heikin-Ashi reversal candle. I'm looking at another chart. I got great volume. It's a nice little trade here at EMBC. You can see the daily chart. Looks pretty nice here. Obviously, this is something that's a nice smooth uptrend. That's a beauty right there. That's a beautiful trade, a beautiful one to try to take on Monday. All right, so that's what they look like. Let's see if I can see what PNW looks like. PNW has been chopping all over the place, but notice let's move this over. We got a little tail on here, a little tail in here. That's a Heikin-Ashi reversal on PNW yesterday. Okay. Now, if I was looking beyond those indicators, what are the indicators? This is my TC2000 chart on PNW right here. And you see this pounding that it took here. All right. And this was the earnings, a nice pop up in earnings, but then it pulled right back. But this is my TC2000 chart on the daily. This is where I have my moving averages. Is my 50-day, the purple is my 200-day, the blue is my 100-day. Notice it got above all those yesterday and moved up into this little gap fill I've got here. These horizontal resistance levels. This is where I would take this. This is a beautiful trade for Monday. PNW is a beautiful. If this opens green Monday, that's a really nice trade, and it's based off the fact that it's got a high Fibonacci reversal candle. All right, so let's take a quick look on some bearish ones, so you can see bearish ones as well. They all work, bullish, bearish, doesn't matter. All right, let's take a look at TradeWeb, TW. DW. All right, TradeWeb. What's it look like? Looks pretty bearish. Fibonacci reversal. This is actually a Fibonacci continuation. All right, you see this reversal in this coming down. This is already reversed. Then it bounced up. Now it reversed back down again. Very nice. Okay, with Fibonacci candle, do you want the Fibonacci candle close before acting? I think I already answered that one. APP. Okay, we try APP, Eric. They got included in the S&P 500 yesterday on APP. So this does not showing after hours. All right. But if I look at after hours in APP, this is what it's going to look like on TC2000, because I do include the after hours here. It jumped up. If we go back to the 5-minute chart, you're going to see when they got included in the S&P 500 right there. Right, APP got in and Hood got included in the S&P 500 yesterday. Right, here's Hood, same thing. Okay, MSTR was one that was mentioned. It could be, it wasn't. See what happened. It gapped down. All right. So that's APP, but APP is a pretty nice setup. But it's gonna be a chase come Monday because it's moved up so fast, and is a little bit out of range right now as far as it's concerned. Zane, you just purchased the SPY Super System. Does it come with a scanner? It comes with a bunch of scanners. You don't have to subscribe to TC2000. TC2000 I've been using for years. I think TC2000 is the best charting program out there. But I do have scanners here. I have a cascading up scan. This is on 5 minutes. I have a cascading up scan for a daily chart. All right, so cascading up scan for a daily chart. I just switch over to the cascading up. Oops, cascading up daily, and that's going to show me stocks that are potential swing trades. And if I click on them and I have a daily chart up, it's going to go right to the chart, just like that. And I would probably want to move this, make it a little bit bigger, but there we go. BKE. These are all stocks that look like they're potential swings, but notice right here, I can't take this right now. It's yellow. This needs to both be blue or green, or red or yellow, right? So Parker and Gamble, decent long. Green and blue, that's good. They line up. CRDO, another nice setup on CRDO. So these are all potential longs right here that are that have continuations. That means it's had 3 days in a row where it closed above the previous day's high. And then on the 5-minute chart, you would be just switch this over to the cascading up standard one right there. These are 5-minute charts. So then I would have to switch back to 5-minute to see what they look like. So here's Divine Energy. Whoops. 5 minutes. Oh, I know why. Let's switch back from Fibonacci. Regular candles. That's kind of weird. Not sure why that's there. Oh, I'm looking at the right one. That's 5-minute candle. That's right. Let's cascading up on the 5-minute chart. Yep. So during the day, these will show stocks that are showing relative strength. If the market's moving down, anything that's got cascading up is going to have relative strength. Anything that's moving down is going to have relative weakness. And these both switch to 5-minute and to daily. And then I've got this bullish look here. This is what I'm testing right now to find stocks that are potential swing trades to get into swing trades long. So I have to look at those again. I'd be looking at a daily chart on these, not on a 5-minute chart. Okay, so yeah, it comes with scanners. You have a fourth indicator in your super system layout called confirmation. Is that still part of the, I don't see it. No, I took that, the confirmation used to be down here. And to be honest with you, I didn't like it. I didn't think it did anything for me. I much prefer to be able to see the indicator. If I can actually see the indicator down here, that's causing the colors to change. What does it do for me? Well, I'll tell you what it does for me. It tells me how steep the breakdown is. In other words, when I see a breakdown from green to yellow, how steep is this line? And I look at it, and it gets steeper and steeper. This is a good indication of some real weakness right there, right? If it's just barely tipping below and kind of moving sideways, but we're not moving going up and down a lot, that gives me an indication that it's not as strong. So I like to have the actual indicator. If you've got the software, all you have to do is call Rightline, and they'll replace it with the newest one. Okay. All right. All right. So let's go back here. I don't want to. Again, this can take some time. So we looked at some of the candles. Let's take a look at one more short. I'll look at one more short. Let's see. Here's Fleur Company, FLR. Let's look at FLR. Now again, this is a 5-minute chart. Let's switch to daily. And let's switch to Fibonacci. All right, there's your Fibonacci reversal right there on FLR. Right, you can see it's come down pretty hard. But if I zoom in on this, I can see that it's starting to break down here, but it's got a flat top right here. So you want to see, you're not going to take it until this turns yellow. You wouldn't take this right now, but it would be on your watch list for something that you can see. See if there's anything else here that I can see. LNG come down pretty hard yesterday. Right there, LNG. Again, potential short on LNG right there. So that's how I use these Fibonacci candles on daily and on 5-minute. I can use them in the 5-minute chart to find entries for stocks. You know, if I was looking for just for an LNG, for example, if I wanted to short this yesterday, where would I take it? See how this goes from buying right here to selling right there at 2 o'clock, 2:45. See how it's breaking down below the 15 EMA right there. VWAP's probably way above. Yeah. So it breaks down there. This is where you could take it as it breaks below the 15, and you ride this thing down until it gets to the VWAP. Right? You've got that much room to the VWAP, and you take it off. Some other stocks that you might be interested in. Tesla, example. Tesla yesterday, it was all over the place yesterday. If you look back, it had a big run up in the morning. Nice Fibonacci reversal right here. See, it went from yellow to blue right there for the 5-minute chart. But you can't take it. You can't take it until it gets above this VWAP. You could have taken it from the 15, but that's not very much room. So I would have taken it as it broke the VWAP right there, and then get out right here as it moved back down again. And then there was short entries for it as well. So it was all over the place yesterday. All right. Okay. So those are the Fibonacci candles. That's how to use them in your trading. All right. You can use them off the 5-minute chart. You can use them off the daily chart. You can use them off of anything. I had a slide that said something about Bollinger Bands. Can you re-show before the webinar ends? The Bollinger Bands is not as important, right? It is important, but I'll tell you why it's not that important right now. When I showed you the SPY super system, you see this is telling me when I get a compression break like that to the downside, that tells me the Bollinger Bands are expanding. Okay, it tells me the Bollinger Bands are expanding, and that's a break to the downside and a break to the upside. This tells me they're expanding. And the Bollinger Band would be if it's showing down, the price is going down, price is going up. This is just telling me that there's a Bollinger Band expansion at that point, which means the Bollinger Bands are separating away from each other. All right, so that's what you're talking about. Okay. All right, so we looked at some of the Fibonacci reversals. All right, let's see if we have any other questions here. Is there a tutorial video on this current SPY super system? I need to do a refresher. Yes, there is. I did a fairly new one not too long ago on the SPY super system indicators. You know, they change from time to time, and I need to put out a new one, but most of the stuff's still the same. Brad? Okay, yeah, and that's, you know, Brad, that's why I put those pop singles in there, the spots, the pop out of the box for breaking compression, because keeping the Bollinger Bands of the charts a pain in the butt. There's too many lines. It just messes everything up. That makes it really nice and simple, and it's also you can use them for entries into a trade as a part of getting into the trade. All right, so I want to, okay, we've been going here for about an hour. I want to talk about the results, and I want you to remember these results we're getting are based on $2,000 a trade, because I have to have some sort of a baseline, and how much and what we're making on those trades. This is based on the SPY Super System software. SPY Super System software is what drives all the trades we take. Okay. Where do you find the tutorial, Eric? I'll probably pop it into the. I'll see if I can find it and give it to you. If not, if you just send an email to Rightline or to Rory, give him a call. He'll send you the tutorials on it. They're webinars, you know, they're 30 minutes long or so. Okay, so in 2023, using $2,000 per trade, we made a little over $60,000 in the room, a little over 60,000. 2024, 2,000 per trade, about 55,000, a little bit less. Why do we make less? Well, the profit conditions you have are going to be very much dependent on the market. If you get more trending days than choppy days, you're going to make more money. If you get more choppy days than trending days, it's more difficult because you have to take your trades up sooner. All right, this is something I'm pretty proud of. This was in April when they put the tariffs on and then took the tariffs off, caused chaos in the market. SPY was down 10% in 2 days, over 10% in 2 days. These are the 4 trades that we had on in the room and on the alert service. We had an ABGO, Broadcom. We get in for $75 a contract, out for $1.04, 39% profit, 754 bucks. Nike, we entered for $285 a contract. We closed it for $9, 216% profit, $4,300 profit. This was, when we get into this, we would short all of these, by the way. We had puts in all of these. Nike was one of the ones that took a wicked hit when they put the tariffs on. They put the tariffs on. Most of Nike stuff is made in Vietnam. They were talking about a 38% or a 39% tariff. It tanked. It absolutely tanked. And I'm going to show you the chart in a bit, but that was a huge profit. We had Sarepta on, made money on that one, and we had NNE on. These were all short. Those are only 4 trades we had on. That's it. When that market was, and I know retail traders who got flushed out of the business when they put the tariffs on and took them off. They went short, they get crushed when they took them off and went back up again. They got long, it reversed back down again. They're done. They're out of business. They margin calls and the whole thing. All right, so this was just cover this year, this last few months. I'm going to go into some other detail, but this was our trades in June of 2025. All the trades we took. I was on vacation for a couple of weeks, so we didn't take very many. 10 trades, 10 wins, 1 loss, 91% win rate, 3,790 in profits. Not too bad. July, this was really a good month. This is my best month this year. Now I want you to see the percentage gains that we take. Don't expect to see 100, 200, 300, 400% gains here consistently. This is what you're going to normally see. 20, 15, 20, 25, 30, up to 50, sometimes up to 50, 60, or 70%. But generally, this is what you're going to see trade after trade after trade after trade. All right, this was a time spread. This was a time spread. CDS. Nice month, July. 30 wins, 3 losses. This is my best month this year. This is very hard to maintain this kind of win rate. I can stay between 85 and 90, but this is tough. But 91, we had a tremendous win rate. The SPY Super System was telling us when when the institutions were in the trades. That's how we did it. And 2,000 invested in each trade produced $16,829. And if you were following the trades in the room, then you would have had very similar results to that. Because this is all just coming off the trades in the room. August, we just wrapped up. I haven't put on the details on it yet. 20 wins, 4 losses, 84% win rate, 5,960 in profits, 2,000 in each trade. And September, we just started. This was the first month, September, but I wanted to show you what we're doing. September, the first 4 days, 5 wins, 0 losses. 2,000 invested in each trade, produced $2,300 this week. That's $2,300 in 4 days with 5 trades. And again, 100%, we're not going to keep 100% win rate. We're going to have losses, but this is pretty impressive. Right? And these, by the way, also went out on alerts. Do I have just the results of ones that were posted? Because you can't be in the room. I don't have them here, but in September, we've taken 4 out of these 5. In July, that was 16,829. I think the room itself was about 11,000. I'm sorry, the alert service was about, I think about between 8 and 10,000. I'd have to go to get the exact number because it wasn't as many trades, of course. But the room has been profitable. The alerts have been profitable every single month. Last year we have 1 losing month, which I'm going to show you. Last September, I'm going to show you exactly that was the only month we lost money in the room and on the alert service. Every other month for the last 24 months, we've been profitable in the room and on the alert service. Okay, so there's August. Again, here's September. These are the 4 trades we took: 25%, 33%, 13% in shop. I showed you that quick one. Fresh Pet, short, 21%, and GLW, 26% profit. This is how you become consistently profitable, which is you're just taking 15, 20, 30, 40% out of every trade you take 85% of the time. All right, so this is January 2024. Now I'm going to run through these quickly. The reason I left these up here is I want you to see the percentage gains and losses we take. We take losses most every month, not every month, but most every month. But you can see the percentage gains. You see how consistent they are. Right? 15, 20, 30, 35, 40%. We had 96 in Boeing. That was a pretty good month, January 2024, a long time ago now. February, a huge month, 11, 7, 45, 92% win rate. To see the percentages, they don't change much. May, jumped ahead to May. We did a lot of time spreads. I did this just to highlight the time spreads we take on earnings. We had some nice time spreads that month. That was an 88% win rate. That was the alert service that month right here, 15 and 2 on the alert service, $4,900 in May. Some of these I separated them out. We actually had a higher win rate on the alert service than we did in the room, although the room profits were higher. June right here. Notice alerted trades, 8,300, 14 and 1 last June, 92% win rate, pretty good. You know, when I remember when I kept putting the trades out on the alert service, these are very high probability trades with good, strong daily charts, which a lot of times we can hold overnight, which is a lot of times going to give us bigger profits sometimes. Not as many trades, but sometimes bigger profits in the trades we take. July, again, same thing over and over again here. Alert trades were a little weak that month, 12 and 4, but still 3,300. August, 17 and 2, 89%, 89% in the room. September, here's my losing month last year. And I haven't had any losing months this year. This was a month last year. In the room, we had 8 wins, 5 losses, 62% win rate. This is embarrassing for me. All right, 62% win rate. It's embarrassing. That's the only time this has happened to me, probably in 6 years, but it happens. But we only lost $1,786 because you see we had quite a few wins. In the alert service, we lost $295 with 8 and 4. All right, and that was, and I just want to emphasize that. So we did have a losing month one time. The reason I do this is I've been to a lot of these webinars, and I see all the Lamborghinis and the big mansions and all this people touting lifestyle. And what they're doing is they're appealing to your greed. That's all they're doing. They're appealing to your greed, and there's no way that you're going to start as a rookie trader here and have a Lamborghini sitting in front of your house that you own in a year. All right, just be aware of that. Trading is a disciplined business that you got to grind it out for. All right, October we bounced right back again. Lost 1786, made 7448. Big October, nice November, and this is just January through March and April of this year. I just listed them because people are always asking me, what about the current month? What about the current month? So here's this year, January 3135, February 38, March 7800, April 5400, Okay. And this, by the way, for those interested in the alerts, this is the structure of the alerts when they come out. You're going to get the stock symbol. You're going to, first of all, I'm going to have a date on it. This was the Nike trade, 3/28. Right? This is when I sent it out. This is all it said on the first alert. It didn't say the rest of this. It just said NKE by the April 11th, 67 puts for 285. That's the actual alert that we sent. Then I followed it up with another alert. I think it was later on that day. Sell order for $9. So you want to put a sell order in it for $9. Okay, and they were sold for $9. I tell you when it closed out for April 3rd. Huge trade. And I could make other adjustments if I wanted to change this to $9.50 before it closed or $8.50. You might get another alert that says that. So you're going to get the stock symbol, the strike price, the expiration date, and the price to pay for the option. Okay. Just curious. Do anyone invest more than 2,000? Oh yeah, any more than 2,000 in a trade? Absolutely. Yeah, I do. I do, Zane. I'm not going to go into details. People can invest whatever they want, but I don't. I'm just using 2,000 as kind of a, just kind of a baseline, something to use. Obviously, if you'd used 1,000, you would have made half of what we posted there. If you made 4,000, if you put 4,000, you would have made twice as much. But you're going to vary the amount of money you put into trades most of the time anyway. But I just need some sort of a baseline. But does anyone invest more than 2,000 in a trade? A lot of people invest a lot more than that in trades. But it runs the gamut. It runs the gamut. Some people only put 250 to 500 into a trade. Some people put 10 to 15,000 into a trade. Eric, in an alert trade with a limit price, say a call, is it okay to have a little wiggle room in the entry? Yeah, absolutely, but not much. All right. Typically, when I put it out there, you want to put your order in and try to get filled. Now, if you look at it and it's gone up like a nickel or 8 cents on this option or something, that's fine. That's fine. I just don't want you to chase. And the reason I say that is because a lot of times the option will shoot up in value, and you think you're going to miss it. Just put the order in there, because most of these stocks will come back down again, and you're still very likely to get filled on it. Okay. All right. So there's the alert service right there. And how do we achieve the stunning results? I think I've covered this pretty well. We follow the process. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. All right. So we only take trades when both of these are in our favor. Not 100% true. I will take trades that the institutions are in if the market internals are at least neutral. I won't take them if they're bearish, but I will take them if they're neutral going on. So we only take trades when most of the time, most of these are in our favor. That's how we trade the best, and that's how we skip the rest. And the super system identifies when institutions are creating a trend. Again, it's doing triple screen assessment. It's looking at momentum, it's trend, it's also looking at money flow. But on momentum, it's looking across 3 different time frames. If you have momentum on a 1 day, a 3 day, and a 9 day, because those are what it's looking at, and you have the momentum candles on all those 3 time frames all aligned, so that so on each the 1 day, the 3 day, and the 9 day, the high of that candle is closer to the close of that candle is closer to the high across all of those time frames. That's the institutions. That's the institutions driving that. For retail traders to create something like that's almost impossible. All right, so here's the charts. We're going to go over a bunch of them here. You've seen this one already. Again, here's your what the SPY super system looks like on Thinkorswim, the one I use. We've already talked about the 15 EMA, the 15. Here's our trend line: current time frame momentum, multi-time frame momentum, very critical. All right. This was a new methodology. This is a new template we have. If you get into the room and you buy the SPY super system, you're going to get this template as well, that you can flip them back and forth. This one has all the indicators. This is for folks who only want to trade SPY super system trades off a 5-minute chart from 2, 3, 4, 5, 6 candles, because this is all you're going to need. You need this. You need the VWAP, and you need the 15 EMA, and you pop out of the box signals. All right, that's what you need to do this. So that you get this template. You can also get this one. You get them both. You can flip them back and forth. This was a SPY super system we trade. I wanted to show this on a Heikenach reversal candle. Here it is right here. This is where we took the trade. You see how it went from green buying to blue selling. Now this is a 5-minute chart, so to yellow selling. I'm only interested in this candlestick, right? So there it is right there. I'm interested in this candlestick and I'm interested in this indicator. This is where they went from buying to selling. I take it here and look at this. It stays below the 15. I stay in as long as it stays below the 15. This little thin red line. Down, 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 and still in it beyond here. I don't even know what I made on this one. I can't remember, but it was a very long trade. And you can see it just stays in it. And you notice how it went from yellow selling to very heavy selling. See the indicator dropping down into the sell zone, or not the sell zone, but it's dropping below the buy zone, and it's moving down nice and consistently. Now, I'm going to talk briefly about the SPY system, super system. I'm not sure how many people here today are interested in trading the SPY, the Qs, the IWM, or the futures on a quick basis. You know, the 5-minute off of 5-minute candlesticks. But I'm going to show you what results I've had doing that by using the same indicators we just talked about, and I use them on the SPY, the Qs, and the IWM. But I have people in the room that use them on the ES, the NQ, the RTY, all of the futures. But this is the results I've had since I started last July with this system. And I'm not going to go through every month, but you get a lot more trades, as you can see. Last August, 56, 6, and 2. You know, it just depends on how many you're looking for. Some of the folks who use this is all they trade. They just trade the SPY super system off of the IWM, the Qs, the SPY. But these are what you're getting. So a lot more trades, nice profits. But the key with this is you're going to be in these SPY super system trades for just one trade at a time. You're not going to have multiple trades on, and you're going to have to watch it. These are quick. You have to watch these trades. This is for folks who like to take these kind of, they're not scalping, but they're very quick trades. All right. This is November, December last year. I'm not going to go into all of them. This was I just used this as a comparison. This was the last quarter last year, October through December. Now, this is important to understand. The SPY super system trades, this is my results. I can't say that this is the results you get because I can't post these. But if you knew how to use the SPY super system, if you had the SPY software and you were following the strategy, which is there's a video on, you're going to have pretty good results. But again, I can't say how much you're going to get because I can't post these. These were mine in October. Now this money here, it was in the SPY super system, completely separate from what was in the room. If you were in the room and you followed all the trades, this is about what you would have made. All right. This is what I made in the SPY super system. This is what you would have made in the room. But this is not included. This is not included in this. These are separate systems. So there's October, there's November, big wins here. Here's December, big wins. So again, pretty nice wins. These are my results. These are the room results. These would be what, if you were in the room, this is what you would get results. And this was the fourth quarter of last year. The two systems combined for me were 42,425. But I mean, I don't know what you would get doing this. I have people do much better than I do because this is all they trade. Some people do worse. You know, I suppose you could even lose money on it. But when you get into these trades, we're getting in at the VWAP or the 15, right? Right when it just breaks above resistance or breaks above resistance or breaks below support. So when you get into a trade when it's very close to support or resistance and it breaks down, you're not going to lose a lot of money on it because you're going to get out very quickly. You're only just a few cents above those things when you get in generally. All right, let me just take a sip of water here. Get a little hoarse. All right, I know I've covered a lot here. Now I'm going to, these are some SPY super system trades if you're interested in these, just some examples of them. This I just put up here because this is before I had the template with has just the one thing on it like this. But here's what you were doing if you was doing SPY super system trades on this is on the SPY right here. You could have taken it here, but you would have been a little nervous right here. But this is where the ideal place to take it. See how it's yellow a couple of frames, breaks here, and it breaks down. And you would I did take this and I get out right here. Just a very quick trade. All right, so here it is back up here again with the other indicators. The only difference here is you've got all the indicators on here. With this one, you just got the current time frame momentum indicator on here. But there's the trade right there. right? This was another one using the new template. Again, if you're looking down here, you're waiting for this thing to give you some indication of where to get in. You probably could have tried to take a trade here. This was, I took it here as it broke above the 15 as it compressed, because this was kind of a wipeout candle. Even if you get in here, you would have stayed in most likely, but because it stayed above the VWAP. But this was a trade I took right here, just in here, out here, and again, it's green all the way through here. Went to yellow and then green all the way through. Another SPY super system trade here. This is when I had the confirmation line on here that's gone now. Again, notice compression, breaks above the 15 right there on a pop out of the box. And $130 profit per contract on that one. Right, so I just show you some of these quickly just so you can see. Here's one entry here, went from yellow selling to blue buying. Take it here. Not much happens. You're sitting in the trade. It's sitting above the 15. Quite a few candles before it actually starts to move up. So this was actually a fairly long trade. Typically, they don't last this long. This was an IWM. This was a beautiful trade here. Again, where am I looking? I'm looking for the pop out of the box to break below the VWAP. Take it right there. You can stay in it. You could have got it out here, or you could stay in it because notice it stays red all the way across here. This is where you wanted to exit. Notice how it switched back to blue. Another SPY super system trade here. Again, you can see the indicators. This is another decent one here. Now I put this up for a reason. You notice it went from red selling to blue buying right here, but notice the price went right to the VWAP. You don't want to take it until it breaks through the VWAP. So you don't take it there, you don't take it there, you take it right there. As it breaks through the VWAP with institutions buying it, you take it right there, you ride it up for 5 candles, and you're out. Notice it went right back to blue here, right back to yellow here. This was a SPY system. This was SPY that I actually traded both ways. I traded to the downside and it broke below the VWAP because we got selling, right? I take it, I get out right here as it turns back to green again, and then it goes to buying right here. So I get right back in again as it breaks above the VWAP. I take it long and I ride it up to the white pivot point right there, all right? Nice little trade, short and long. Some more other one in the SPY. I didn't show entries in here. I just want you to see, where would you take it? Well, it's green, then it turns to yellow. Take it right there. Get a pop out of the box signal right after that. You take it, you stay in it as long as it stays below this 15 red line, which it does, and you're in it, and likely you would grab profits right here. Okay, now I'm going to watch, those were SPY super system trades using the 5-minute charts. These are going to be, these were more swing type trades, although the line was a 5-minute trade. This was a fairly nice trade. I think I showed you this one, 51% profit, but this was on a 5-minute chart. Right, and this was fairly recent. This was August 1st. So here's the breakdown. You see this pop out of the box symbol, see the VWAP right there, pink line. See the yellow goes from buying to selling right there, green to yellow. This is where you take the trade, right? And it stays below the VWAP. So that becomes your stop. Now as it draws away from there, the 15 becomes your stop. And you stay in this, and you can take it off wherever you want to take profits. I was in it for an hour and made 51%, but this thing stayed red the whole way until it turned blue over here. So that was a fairly long run. I don't know if you would have had the patience to stay in it the whole way, but I stayed in it for an hour. So I stayed in it for 10 candles, like 12 candles, I guess. This was a daily chart. This was a URGN that we took. Again, you see it compressing here. It's above the 15. This is a daily chart. See, it went blue here. Could have taken it here, but I was waiting for a compression break, and there I got one right there. So I took it here, and then it didn't do anything. We were in this thing for 3 days, and we were basically just bleeding money. And then, but it was still bullish. We took it here. We get out here. Boom! It popped up there. We took it off. 48% profit in that URGN trade right there. NVIDIA. This is a daily chart of NVIDIA. I showed you this one. Took it here as it did a PPO, a pullback opportunity. Turned green. Up it goes. Nice trade. NVIDIA, 32%. SMR, I showed you this one earlier. Again, on the daily chart, yellow, selling, green, buying. Buy it right here. Both of the current time frame, multi-time frame are both green. Up it goes. This was a Nike trade I showed you. We took it on the 28th. This is where we took it right here. Look at the selling on this thing. Institutions selling this across the board. Took it here. Now, there was actually enough profit to take it off that day. We did not. We stayed in it, and it went sideways, and we're wondering if maybe we made a mistake, and here comes the tariffs, and there's that drop down. We are out of it right there. One of the sayings I have in the room, and one of the rules I follow is gaps are gifts. If you're in a trade short and you get a gap down in the morning, take the profits. If you're in a trade long and you get a gap up in the morning, so you've got good profits, get out. All right. A lot of people think that they're going to stay in and get greedy and expect the stock to keep on going. But here's an interesting fact. On gaps, you could have a situation where it's a gap and go, and that would be a situation where it keeps going in the same direction. You can have a gap and crap where it gaps and then turns around and heads back down again, or heads in the opposite direction. And you can have a gap and chop, which is just gapped up and move sideways. So how many of those scenarios are you going to make extra money by staying in it? One, the gap and go. It's the least likely to happen, all right? So given that, when you get out of the trade right near the open, you've got one other thing in your favor, and that is the volatility in the options. Because the stock's gapped, the volatility in the options drives the option price higher than it normally would be. So if you get out at 931 with a profit, and at 940, that stock is at the same price it was when you get out, the options are going to be trading for less because the volatility is going to drain out of there. All right, just kind of a lesson in gaps are gifts. One of the same thing I say all the time. There was a Sarepta trade we took, same thing we talked about there. You can see, are the institutions selling it? Obviously they are, all right? HMIS, this was a trade I took that I kind of missed. I should have taken it back here. As soon as it went to all green, I didn't. For some reason, I took it here. I took 25% on this. I did leave a runner on and get a huge percentage, but this was just informational. I did not include this in any of the results. That was a pretty big run-up. Palantir, take it here again, see, selling, buying. Take it here, ride it up, 31% profit in 2 days. Lulu, gap down on earnings. We watched it compress. I wait for it to go short. Notice it's blue here. Blue on the day on the multi-time frame, then it goes to selling on the multi-time frame. That's what we take it, right? We get overnight trade in for 192 a contract, out for 300 a contract. Right, and Amazon, this was a 5-minute chart intraday. So again, this is, you can see where I took it right here. As it compresses, everything's green, you take it up. ENPH, a nice short. So it works both ways, but you can just see your indicators telling you exactly what's going on. Okay, exactly what's going on. Verizon, 50% in an hour off a 5-minute chart right here. See how it broke down right there off the VWAP? Take it there. It's obviously they were selling it. All right, and this was Tesla. We took this overnight, had a big gap down from 120 to 112. Nice profit in Tesla. Okay, so that covers the charts. It covers our results. We spent a lot of time talking about Fibonacci candles. Here's what we use in the room. I'm going to show you now the offer that we have. Now they extended this. This was going to end Labor Day. Apparently, several people called in the end of the week and said they were out over Labor Day weekend. Anyway, they're going to extend this through this Sunday. Then they're going to change this. And this is a pretty impressive offer. This one right over here. First thing is you can take a 2-week free trial. You get in for 2 weeks. You're going to get the text service. You're going to get the trading room in my room for 2 weeks. You can cancel anytime. You're going to get to see all my videos. The training modules, about 31 of them. Right. After 2 weeks, it switches over to $396 a quarter. All right. This one here is for the text alert service. If you want to be in the lifetime for just text alerts, $24.96. If you want to get something other than these, by the way, you just call Rory. He'll adjust. If you want to do it for a year or something, he'll adjust that for you. But this is the deal right here that people have been jumping in on. This is a one-time payment. This is lifetime. This is lifetime, one-time payment. This includes the SPY Super System software, the software we've been talking about. It includes the software. It includes the trading room. So you get the software and you get my trading room for life. Okay, just forever. You also get the trading class, the master classes, or basically the training videos. And we also have a Discord room where we have 2 other professional traders that you have access to that. $24.96 for the software and the trading room is to me, it's a steal, because this software has made such big difference in my trading. But again, if you want to do something different, a different period of time or whatever, you can call Rory and he'll work with you on this. If you want to do it shorter time or whatever, but he definitely will work with you in this if you're interested in that. All right, and here's his number, 786-732-4656. Again, you can put your name and number in there. Zane, what are the dotted lines near the 15 EMA? Let's look. These dotted lines here, this is a couple of things. This is an old chart. That's a different pivot point that I took off. I don't like it. This is the only pivot point I want. These dotted lines are called, this is trend dots. And they used to use these things for when the trend dots cross through the 15 to the upside or to the downside as an entry. I don't like them. I just soon take them off, so I don't use them at all. I'm trying to keep this, I really try to keep my trading as simple as possible. I try to keep it to where I'm going to use the least number of indicators. You've got to have a bunch of indicators, and then technical analysis on the chart to find the best trades. All right, because the more complexity you throw into to finding the best trades, the least likely are you find a good one, and it's more difficult to make a decision to take the trade. Keeping it really fairly simple makes it much easier, okay, to get into these things. How does a software program interface with thinkorswim? It basically is, if you buy the software, you call Rightline, they'll take and install it on your thinkorswim platform, and it's done through all the studies. They're individual studies that are programmed, the proprietary studies that go on the thinkorswim platform through the studies, and that's how you get all those indicators and everything that's on that chart. And again, if you buy the software, Rightline will install it on your machine. Either Sergio will or Charles will. One of the techs down there will install it on your machine. You don't have to pay for thinkorswim. You can download the platform. They'll put it on there for you, and then you don't have to trade on there. Remember, you don't have to trade on thinkorswim. You can trade on any platform that you want. I use Tradier, but you can use Scott. You can use Fidelity. You can use Tastyworks. You can use anybody you want. Okay. And again, this SPY Super System, this is the deal right here, that if you want to be serious about trading, this is what to take. But if you want to do it for less time and maybe pay less money for a shorter period of time, call Rory. He'll work with you on it. Can I talk more about position size? You said you vary the size. I do vary the size, Eric. When I take trades, a lot of it is, listen, the one thing you want to think about is market first. The market is the first thing that makes a determination of how you should be trading each day, and even for swing trades, all right? So if I've got a market that's very choppy, just chopping up and down, above the VWAP, below the VWAP, the SPY's just chopping all over the place, my trade size is going to be smaller. My exit times are going to be quicker. I'm going to take quicker profits. I'm not going to stay in trades very long. If I've got a trending day in the market, the market's moving up, right? Or moving down. It's trending one way or the other. My trade size is going to be larger. I'm going to stay in the trades longer. I'm going to go get more profits out of them. So that's what determines my trade size. What is the market doing? All right. And my trade size is based on dollars, not based on contracts. Obviously, if the options are going for $2 a contract, you can't buy it. You can buy a lot more if they're going for $1 a contract. But the amount of money that you put into the trade should be about the same. Okay. All right. So there is your setups here. Now, your offers here. In the chat box, I think Rory probably posted the link. Yeah, there's a link in the chat box to the what they're talking about, this sale that ends Sunday. This will all be in there. And again, there's his number right there, 786-732-4656, and he'll talk to you about that. Can you put the phone number back? There it is right there, Neil. 786. Yep, I think Rory just popped it in there for you. All right. Any other questions? I hope that I can actually help everybody. It was a help to me when I learned it many years ago, but it was definitely a help. And there's the deal right there. So take advantage of it. All right, everybody. Hope to see some folks in the room on Monday. We'll get back to a full week next week. We're having a bang-up month. Of course, I told you 5-0 this month so far. The consistency is to me is the most important thing. And again, the consistency and the profits that we're making is based on that SPY super system, that software, letting us know whether institutions are in the trade or not. Most retail traders don't listen. 99.9% of retail traders in the world don't have it. And 99.5% of retail traders in the world don't even know how to use relative strength and relative weakness. If you've got those things, believe me, you're going to beat those people. And again, it takes discipline, it takes patience, but we have the tools to do it, and that's the most important thing. Eric, okay, Rory's emailing you the link to the tutorial. Okay, great. Thanks, Rory. Appreciate that. Thank you very much. Okay, everybody, listen, thanks so much for spending a Saturday afternoon with him. I know it took a while. Again, I had quite a few questions. I do like to get into details of these, because I know I've been to a lot of webinars and they whip through the thing, show you, here, buy on this green arrow, sell on this red arrow. Yeah, why? I think people need to understand why we're taking trades. What's the methodology behind it? What's the strategy behind it? What's the reasoning behind it? All right. They need to be technical reasons. They don't need to be based on whether somebody told you about the trade or you read about it somewhere. All right. With an alert trade, once filled, should I put it? Yes. Good till cancel, exit on. Yeah. You can put it before you issue an exit. Well, you can't put a good till canceled on it before I issue the exit. You can, when you put the trade, if you're trying to get into the trade, Eric, I would not do a good till canceled. Because the only reason that's good is if you're going to hold it overnight. If you're going to want to get in the next morning, and I don't think you want to do a good till cancel on the entry. You want to do a good till cancel on the exit, because if you get a good till cancel on the entry and you don't get filled, and then let's say you're trying to go long and the stock gaps down huge overnight, and you've got a good till cancel on it, you're going to get filled on a trade you probably wouldn't have taken had you seen the price action that day. So I would not put it on the entry. I would only put it on the exits. On the exits always, because if you're away, you can leave it good till canceled you can leave it good for the day. That's the same thing as good till canceled that expires at the end of the day. So just putting the trade on will hold it there all day long. Okay. I mean, once I'm in a trade, I'm talking about putting the good till cancel for the exit. Absolutely, absolutely. Always do good till canceled on the exit. All right. You might get some adjustments to it. Now, I'll have a good till canceled on all my exits. What I do is I review the trades in the morning prior to the market opening, and if I want to change the exit, which would generally just be to raise it, then I'll send an alert out on that. But if you've got good till canceled on the original exit, you're going to be in profits anyway, so that's fine. Yeah, good till canceled, absolutely, so you don't have to do the exit the next day. Say at a 35% profit target. I don't know what my exit's going to be, what I'm going to post for an exit. You can do that if you want to put a 35% profit target on your trade and leave it out there. You can, that's fine. In other words, you're not necessarily using my exit, you're using your exit. Nothing wrong with doing that. Nothing wrong with doing that. Typically, we typically try to make, depending on how we're in the trade, 20 to 50, 60%. But if you can make 35% at every trade and you've got an 80% win rate, you're going to do pretty good. Thanks, Eric. Appreciate the questions. Thanks very much. Yeah, in case I'm away when you post the exit, yeah, that's fine. If you want to have one automatically in there and you don't see the exit, now if you see the alert for the exit and you can get back in your platform, you can change it at that point if you want. But yeah, I see what you want to do. You just want to lock in some profits if you're not around and it goes up 35% or something. Sure, 30%, 35%, whatever you think is acceptable to you. This is your money. You're trading your money. Okay. I'm giving you what I recommend to the trades, what I feel is the best information I can give you in getting in and getting out of trades. All right, but you're trading your money. I'm trading my money. How much I make shouldn't be an impactful to you at all. I hear a lot of people talking about how much money they make. They show you. I showed you my equity curve. Fine, but that's for $2,000 per trade. That's not my equity curve. I'm not going to share my actual equity curve, but that shows you what would done if you put 2,000 into every trade. But how much money I'm making isn't important. I mean, maybe it gives you some confidence that the system works, but I showed you what the results were. What matters is, are you consistently making money? That's what the aim is here, is to get you consistently profitable. All right. All right, everybody. Thanks for being here today. Again, I'm not a professional webinar presenter. I'm not a salesperson. I'm just a trader, full-time trader. Been trading full-time for a long time, and I'm presenting it the best I can. You know, again, might not be as smooth as some people, but the information is accurate and not hyped. All right. So thanks very much for being here. Hey, Omar, thank you very much. I appreciate that. Thanks, Eric. See you in the room, Omar. Thank you very much. Appreciate it. Master Wise. Thanks. All right, everybody. Have a great Saturday. Have a great weekend. We'll see everybody back here. As many as can get back here on Monday. Take advantage of this offer. Believe me, you'll whether you're in the room or out of the room from 2 years from now, you're going to have the software to help you be consistent, more consistently profitable, and you'll wish you had it. All right. Have a great weekend, everybody. See everybody on Monday.